evening and welcome to the Australian Stock Market Show. We do hope you've had a great week and are staying safe. Henry Ford once said, anyone who stops learning is old, whether it's 20 or 80. Anyone who keeps learning stays young. We encourage you to stay young with us and keep learning, as tonight we have a great show planned for you. So sit back and be open to learning as we take you on a journey to cover many interesting topics and stocks, including Afterpay, Horizon, GrainCorp, West Farmers, AMP, Rio, S32 and many more. As always, our aim is to educate and inform you as we answer your questions and bring you our upfront, no BS approach to all things stock market. Our main topic for tonight is ETFs versus stocks, where to invest $10,000 for the best growth. Hello, I'm Janine Cox, your host, and joining me tonight is Dale Gillham, and we're Australia's most trusted stock market educators. G'day.
How you doing?
Good. And you?
Well, I'm pretty good. I had an Aussie meal tonight.
What was that?
Roast lamb.
Oh.
With garlic, so you know what I'm tasting like over here.
Yeah, don't talk to me about that. You know how I feel about that topic.
What, roast lamb?
Yep. You've known me long enough now.
Stay away from me. Keep away from me. No, I had a good. Did you have a good week?
Yeah, I did
We don't
actually.
see each other much nowadays, do we?
That's okay. It's a COVID world, isn't it?
I know. It's like COVID sort of.
Everybody's complaining about it, and I just sort of tune out when I hear that.
I'm saying to people, it's just a first world problem. If this is the worst that I've got.
Look at what the people in Afghanistan are having to deal with. Oh my goodness!
I know. We've got no issues with COVID. If you're in Afghanistan, you go, toughen up, princess. That's what they'd be doing.
Yeah.
You know. So yeah. And one thing I felt really sorry for him the other night when Victoria said, "Well, we're going into curfews and lockdowns for another 2 weeks." I just felt for those small cafes and small restaurants and small businesses that just can't open. And
yeah, I know.
I said I'd be sort of in the corner in the fetal position if that was me, probably just going, why? You know.
Look, when I went out to the supermarket, I stopped off and I ended up buying some baklava because I absolutely love that. And I paid some astronomical price for it, but I didn't even blink at it because I thought that's a donation.
I don't even use my coffee card, you know, where you get your 5 coffees and you get the next one free. I just think that's terrible, using that during lockdown. So I'm happy to support and buy more coffees anyway. But let's move on anyway. So Janine, before we get into tonight's show, I really wanted to announce that we are going to take some live calls on the show tonight. And I know you're excited about that. As such, I wanted to invite our viewers to pick up their phone and call into the show. Now, if you're just sitting there thinking to yourself, geez, I really would like to ask Janine and Dale a question, then this is your opportunity to call us now and speak to us live on the show. Now, the number you need to call is 03 92909988. That's 03 for Melbourne. So remember, 92909988. So pick up your phone right now and get dialing. It's first in, best dressed.
Now, moving on, it is the third Tuesday in the month, and this means we take a look at world markets. So let's get into the chart, shall we?
Now, on your screen, we've got the watch list for all the major world markets, which we show people every single week. Now, I can't read over to the top left-hand corner. What setting is it on?
Okay, it is on month.
Oh, good. I didn't want to put my foot in my mouth again.
Would you like me to give you some really thick bifocals? Will that help?
No. Just
how about a binocular?
Get into this. What are we doing here? So India for the month's up 5.75%. Before we get into this, can I actually say something?
You just did.
On the news, well, I did, didn't I? On the news tonight, like our market's gone down the last 2 days, and on the news today, it's like the world's ended.
Yeah,
it's like the market's down 60 or 70 points today, and it's like, oh my goodness me, and it's like, and I'm just laughing. I'm thinking, seriously, that's like, don't panic, people. It's just down a couple of days. Big deal.
Yep, I agree.
Anyway, let's get back to the charts.
Let's look at the facts here on the indices. So,
damn media.
India is actually still on the leaders board for the month, 5.7% up.
That's pretty good.
Shanghai Composite Index 3.5% up.
Isn't that good to see? Because the Chinese markets have been more bearish this year. Yes,
and the CAC 40 Index is actually up 3.42. I never like saying that just in case I say it wrong, so I was a bit nervous there just before that. S&P ASX 200, the XJO is actually up 2.57%.
Even after these big falls today.
Now, do I have to read them all?
Yeah, no.
I just really admire the weather readers, how they're so patient reading out all of that stuff.
Me too.
DAX index, okay, 2.45% up. The Australian All Ordinaries Index, 2.42%. So that's not bad for the All Ordinaries Index. We're actually ahead of the Dow Jones Industrial Average, 1.9% up for the month. And the S&P 500 is actually slightly below the Dow, which is interesting, isn't it? The biggest stocks taking the lead there.
Yeah, the last couple of months the Dow has been a little bit ahead of the S&P 500 and it's generally some of those major big stocks that are moving.
Yep.
And a lot of the technology hasn't been moving as well.
Can you say that again?
Technology.
Major big?
Major big, yeah.
Okay, the FTSE 100 index up 1.73%. And then we've got some of the Asian markets towards the bottom and New Zealand mixed in there as well, but they're still positive, which is good to see. Oh, we've got one negative
Singapore
still.
down there, minus 0.48. Interesting, the Hang Seng in Hong Kong was only up 0.8, where the Shanghai is up a hell of a lot harder. So it's interesting how China works. It's really interesting how the difference between the Hang Seng and the Shanghai comp.
So still across the board, most of them are up for the month. Do you think that's about to change?
It could be. Go and have a look at the weekly chart and just see what's happened in these first 2 days of the week. Obviously, the US market's only had 1 day, so they're only barely just in the green. The US and the Dow Jones up 0.31, but look, and the S&P up 0.26, but most of it is red, as you can see there.
There's the Australian ASX 200, the XJO.
So even after 2 days of bearishness and doom and gloom where we should all be really depressed because of the media telling us we should be, we're still only down 0.61% for the week.
All right then, so let's go for the year and have a look what's going on. So, oh my goodness, there's a change again, isn't there? Look, the CAC 40 index is 21.82, the S&P 500 index up 19, the NASDAQ 100 16.92. What are you noticing about that? We've got the Dow up 16.32.
Yeah, I know.
What do you think? Because I mean, did you think that this is the financial year or the calendar year? It's still calendar year, isn't it?
Yeah, it's the calendar year.
Yeah. So I mean, is it your thinking that the Dow Jones and the NASDAQ are going to keep dropping off?
Well, I've been saying for a while I don't think the Dow Jones or the US markets in the second half of the year will end up any higher on the 31st of December than what they were by mid-year.
Yep.
I think we're going to see a bit of a dip down in those markets and then come back to roughly probably where they were, maybe a little bit below where they were.
So you'd be surprised if they go to new all-time highs?
Not necessarily in the short term, but I'm thinking the next few weeks. But I'm thinking sort of we're going to have a dip before now and the end of the year, and then we'll come back a bit. So that's what I'm thinking. So maybe the dip will be in September, maybe in mid-October or November.
Right, okay.
But I have been wrong before, though.
Okay. This market's strange, though. So All Ordinaries Index up 14.58% for the year so far. The FTSE 100 Index up 10.73%. And then looking at the Asian markets, they seem to be down to the bottom of the leaders board this week. Well, it's staying the same more or less. Straits Times Industrial Index up 10.52. And then we come down, the Shanghai Composite Index up 1.23. So, geez, that's interesting, isn't it?
Yeah, that's what I said. It's different. The Shanghai Comp and the Hang Seng and the Asian markets are different than Europe and America. So, but we run a lot more aligned with the Asian markets. Yeah,
this year it's all about the haves and the have-nots, isn't it, really?
Very, very much so.
Okay, so did you want to talk any more about that at this point?
Nope.
No? Okay. That is all from us about world markets. Now it's time to get into our first email for the night.
Now our first email tonight is from Chris, who says, "Hi Dale and Janine, what happened to APT share price if on settlement date the price is higher than the agreed buy price per share from Square, which is Australian 126.21 now, I believe? Sorry, I've never been involved in a takeover before and unclear of the proceedings. As an owner of both Afterpay and Square shares, I would just sell my US shares and take profits on that day. Afterpay stock is available on the ASX. Now, I can't think of any reason to hold Square stocks or buy two in my portfolio unless I'm missing something. So thanks very much for your help, Chris. Chris has got the false assumption that he's going to own two separate shares.
Right.
I believe he's saying he thinks he's going to own shares and Afterpay shares, and that's incorrect. Afterpay is getting absorbed into Square, and you'll only own squared shares. That's hard to say, isn't it? Squared shares.
Yeah.
So you'll only have it. It's just that Square's going to dual list. It's going to be listed in the US, which it is now, and it's going to list on the Australian stock market, but you'll only own shares in Squared. That's all you'll own. And what I would suggest you do is read the offer documents, so that all the documents that are coming out from Afterpay, all of the takeover documents and everything else, that's exactly how it's going to, that's how it will happen. The dates, the prices, that's all exactly will tell you what will happen and the processes. So you can just relax, take it easy.
Just outside of his question though, if we just look at the chart for a minute, he's saying that it's a 126.21 was the offer.
Correct.
And the share price is trading above that.
So why would it be doing that?
Why is that? Because there's only one situation that I can think of why that would happen, and that's because the market's speculating that there's somebody else in the wings.
But is it now a binding agreement? I haven't read that part yet.
No, I haven't either.
So I haven't gone into it. So I would just look at that, Chris. If the offer's binding and the board signed it all off and everything else, then just sit back and wait if that's what you want to do. Or you can sell your shares on the market now and take a profit. Pretty much that's how you do it. But thank you very much for that. That's all about on Afterpay.
All right, our next email is from Rashmi. Hi, Dale and Janine. Thanks for such a great show. It's interesting that you mentioned GrainCorp, GNC, in your show yesterday, just as I was wondering what was going on with it. Well, that's perfect timing. It was almost like you read my mind. I purchased some shares earlier this year at 5.10. They seem to be going sideways now for a very long time. Your thoughts would be greatly appreciated. Cheers, Rashmi. So have you got some sort of connection with Rashmi?
Yeah, but we've
some sort of ESP going on there?
Yeah, we're old mates from a long way. We've been past lives together. That's how close we are.
It's the Force?
It's the Force. We're just connected, me and Rashmi, don't you worry about it. And as I am with lots of our viewers. So if you do want to give a call to us, remember, ring 039290 9988, and that's so you can talk to Janine and I personally. So give us a call, 0392 90 9988. Now let's get to GNC.
Okay, now I attempted to check what was happening with the data for this particular one, because you'll see that odd looking bar there. So I don't know. It doesn't look right to me, so I don't know what happened there.
That's the big. You've got to use the pointer. You've got to use the mouse, okay?
Look, I wasn't going to.
I haven't touched it yet, so it doesn't have void germs yet.
I don't know what to say now. I'll just shut up. I'm looking at the chart here. I can see I'm going to focus on what's happening more recently. Okay, so he's talking about the fact that he purchased at 5.10,
yep,
which is somewhere around this area here. So I don't know exactly what the date was. However, it's gone sideways through that move and then made another move up. And when stocks do this, they will often repeat it. You can see that there was a sideways move through here from November 2020, a nice rise up 1 week, and then it did nothing, for weeks and went sideways again. So there is a possibility that it could do the same thing again. It
went up strongly last week. Sorry, I'll cut you off. But it went up strongly last week because I told people about it last week.
Okay.
So, no, it's not. Didn't do that.
Is that why?
No. Last week, what he's talking about, what Rashmi's talking about, I said, what are the growth areas in Australia? And I just looked at all the companies. There was a report on all the companies where the industries are expanding, and there were grains and all that sort of stuff, and wheat, etc., all these hundreds of percent growth industries in Australia. And I said, well, if that's happening, so what stocks are likely to benefit from that? And one would be GrainCorp, one might be Wes Farmers, one might be Elders.
Look, my question to you is, should someone just believe that though?
No, they should do their research.
Right, and how do they do that?
They ask you.
Well, they can look at a chart.
Oh, they can look at a chart.
That's a beautiful thing. They can look at the futures for those commodities.
Correct, they can do that. They can look at the chart
and see if they're going up, because there are some charts that are looking pretty awesome at the moment in that space.
Some of the grain charts, yeah. So that's what we're doing. So what are you saying now?
Well, what I'm saying is, bought it at 5.10. You'd be pretty happy with that right now, and you'd just be watching. I just wouldn't be concerned about it at all. I'd have a strategy on it. The challenge, though, if we're talking about trend lines, particular strategies, is it's going to be quite away from the trend line, because the line would be way down. I'm just going to grab any line there that you've got in your little kit bag.
I'll have a drink because of my garlic breath.
You need a drink? And so it's so far away from the line right now, chances are it might actually accelerate higher. So you might not need to be concerned about this line, but often stocks will come back to the angle of the trend.
But with a big move like we saw here, so this big move through here, that's last week obviously, sometimes we'll start seeing it takes off for whatever reason, announcement or whatever is going on here, and then sometimes that second week or the third week, you see it drop back a little bit.
Takes a breather.
Takes a little bit of a breather. So this bar currently doesn't bother me because obviously you can see how it gapped up to open on the previous week's close. So it closed here at $6.09, and it opened up on this week yesterday at $6.15.
So why do people get worried about it when their shares ride strongly?
Because they don't know what to do.
Yeah, but I think that's a quality problem.
I think that's a great problem because, you know, people go, well, my share's taken off, what do I do? Because they've seen them make profit and they're going, oh, I don't know what to do now. But isn't that the whole purpose of owning a share? So it's about not knowing where to exit.
I guess I would have been, if I was him, I would have been more concerned about it when it was going along through here. It might have come back, but it didn't. It found support and kept going.
He didn't tell us when he bought it, did he?
No. So look, I'd just be really happy if I was him right now. Have you got anything else that you wanted to add?
No, I don't think I've got anything else I wanted to add. So I think we're pretty right there for GNC. Maybe we can wait for my next show where I tell him the next stock we can buy. So because me and Rashmi are together,
linked.
mate. We're linked. Cool. Moving on, we have a question from Mark, and Mark says, "Hi, Dale and Janine. What we're looking at here is I've recently bought a small parcel of shares in Province Resources and would be interested in hearing your charting views on the stock. I'm considering buying more as I'd really like this story. PRL is aiming to be Australia's first truly zero carbon green hydrogen producer using wind and solar. Kind regards, Mark."
Now, this is an interesting one. The question I have is it a backdoor listing? Because the chart's quite interesting over this whole history. According to this, it's been actually on the market since 94. But there's this odd gap down here in 2010, which looks like a backdoor listing. So I don't know whether that's the case or not. But anyway, at the moment it's going up. So you'd have to be happy with it. The way that it's unfolding is quite nice. Although, if it did trade below this recent low here of 13 cents, is that 13 cents? Can you just confirm that for me? Then I'd be quite concerned about further downside for the share. So while it continues to stay above that low, it looks like it'll do fine. So what would you suggest with this one?
Well, to me, it's like we've already talked about things in terms of like alternative energies and thinking they're great areas to go and look at to put a big solid investment in. We're talking about a little bit more speculation still, but I think I like that story at the moment. This stock does look good, and if it's in that alternative energy space, like he's been doing his research, I don't have a problem with it. I think it looks great.
Yep, okay.
I would just keep a stop loss on it, obviously, as we always would, but I would just hold it, but I wouldn't try and put massive amount of money in something like this at the moment.
That's good
because
advice.
It'll still be quite volatile. So that's it for PRL. Now, I do believe we've got a caller on the line, and it's Jane from Brisbane who wants to ask about BHP. Jane, are you there?
Yes, I'm here.
Welcome to the show, Jane. It's nice to have you on. What's your question for us?
My question is about the Woodside and BHP merge, because I hold Woodside share and currently I'm 10% loss. So what should I do? Hold or sell or buy more?
So you own Woodside and BHP, but you're specifically...
No, I only own Woodside.
Oh, okay, sorry. So you own Woodside Petroleum, you own it, and you want to know whether you should hold or sell. What was your buy price, Jane?
Oh, I'm currently in 10% loss.
10% loss at this point in time.
Yes.
All right, well, Janine's going to have a look at it right now for you. Thanks for being on the show.
What did you say? I can't hear anymore.
She's currently at 10% loss, and she's a lovely lady from Brisbane in Woodside.
Okay, that's fantastic. Good on you.
I'm yelling at you.
That's exciting, isn't it? Look, I mean, it's exciting from the point of view to see more ladies investing, but unfortunately, Woodside is not a good story right now.
No, it's not.
The issue is the fact that it's been falling like it has. It's continued to, like looking at the monthly chart, it's gone out, it's taken out this really strong support level, which is under this low here in 21.54. And the fact that it's gone through that indicates that it could keep falling. So there's the problem that she's got right now, but it's great that she's got a stop loss on her position.
Yeah. So stick to your stop loss. It's not a good story for you, Jane. I think there's more downside on it, or Janine's saying there's more downside on it at this point in time. So please just stick to your stop loss, because a lot of people think a stop loss is meaning they're wrong, and a lot of people won't take their stop loss because they think, oh, I've lost 10% or 12% or 15% or whatever that is. But sometimes it's just better to rip the Band-Aid off really, really fast and then come back in later. So if you want to be like Jane and you want to give us a call, ring 0392909988. That's 92909988. Pick up your phone now and give us a call. Janine.
Okay, our next email is from Tim. Hi, Tim. Tim, loving your content online and in your book. I invested in banks during the COVID downturn. CBA, Sun, ANZ all made some large gains. With large dividends and buybacks announced, is setting up a DRP for each a good way to build my portfolio? Or should I be taking those dividends and investing elsewhere? Regards, Tim.
Exactly what you're going to say. And I'm going to keep my mouth shut.
Take your money and run.
Come on, take your money and run.
Yeah.
Okay, it's a song.
Exactly. Yeah, that's what I would suggest.
Why shouldn't he dividend reinvest?
Simply because it's going to end up costing you more with your accountant in the long run, because you'll have all these little parcels of shares that you have to account for when you sell them in terms of your cost base for capital gains. And sometimes if there are corporate actions along the way, it can make calculating that cost base a real challenge. And I've had accountants in the past that have, not for me, but for other clients, the clients told me that they just picked a cost base based on the brokerage, that they were charging, and didn't look at the other corporate actions that have happened along the way. So that's their decision.
I know, I did it once with one stock, and I tell you, it was never-ending nightmare for me. It's like, never again. Dividend reinvesting, not smart to do. Take the money, run. Invest in other things. But thanks for the email. Now, the next one we do have is from Rohan, who says, hi, Dale and Janine, or again, hi again, Dale and Janine. Recently, Horizon Holdings has attracted my interest for its growth potential and its dividend yield. I don't currently hold it, but I'm unsure, mainly because of the current political society views on fossil fuels. But on the upside, the greatest investor of all time would see value in its fundamental data. I think he's meaning Warren Buffett. Would your view be much appreciated? And also, what do you consider short, medium and long term? We also received a question from Andrew as well on the same stock. So we're going to answer Andrew's, because I remember the question was pretty much exactly the same. What do you think of it? That's pretty much what it is.
Well, look, we've got the stock on the screen if you'd like to have a look at that now. So the monthly chart's on the left-hand side. So this is, for new people who are watching the show, this is the standard format. Looking at the big picture is always important first, and then looking at the right-hand side of the chart. Now, the sad reality is when you meet somebody, your first impressions are of what you can see, true?
Yes.
And then they open their mouth and that's another impression again.
Well, they either improve that impression or they detract from it, don't they?
So when you look at Horizon Holdings, first impressions, what do you see?
It looks good.
Their weekly chart does. What about the monthly?
That looks ordinary.
What type of stock is it? It's
a very volatile type of stock.
Risk?
Risk-wise, I think it's pretty high risk because it drops out of bed really fast.
Yep. Okay. So
did I get an A+? You
did.
Elephant stamp?
No.
Okay.
I don't give those. All right, so looking at the right-hand side of the chart, short-term proposition looks interesting, doesn't it? But the risk on this type of share and what it's in is the real challenge for it, with the coal side of things, slowly, being depleted almost to the point where everybody's seemingly making an exit out of coal as fast as they possibly can, because it's a big PR thing. And the government has been trying to hang on to that, because the argument was years ago that you've got the coal there, you may as well get it out of the ground and do it.
We've got truckloads of it.
But attitudes are changing now.
Maybe we can turn it into diamonds.
And so I'm not going to even answer that one. Looking at the right-hand side of the chart.
Doesn't know what a diamond is.
Can we just focus on this?
Okay, sorry.
I don't know what you give your wife, but that ain't a diamond.
I know what I give my wife, and it costs a lot of money.
All right, so Horizon Holdings Limited, AZJ, and we're saying that short term, if you were in it, then you would probably be hanging on to it right now.
You would be.
The downside risk is, if we look at the right-hand side and we're looking for risk management, if this stock takes out this low in June 2021, what's your thought?
Look, I think it would go further south and it would go below all the lows back from the last year. I think if it went below that one. So it's really one of those, it's a short-term play rather than a long-term buy and hold, which is part of his questions, is what do we deem short, medium and long-term. Now, everybody's got their own view on that. If you ask a financial planner what short-term is, they pretty much will say 5 years plus. Anything less than 5 years is short term. For Janine and I, short term's anywhere between 1 and 3 months. Medium term, sort of 3 months to 18 months-ish, 2 years. after 2 years, it's more long-term for us. We just don't hold stocks that long. It's rare for us to hold a stock more than sort of 2 years.
So
but if it's really bullish, we will.
This is better than some of those really lightweight shares that we see people writing in about, but it's still higher risk and you need good rules. Is the
very
message.
much so.
Yep.
Correct. Anything else you'd like to say?
No, I don't think so.
All right, well, I'll take it from here. Thank you very much for that. But before we get into the top now, later on in the show, we will take another opportunity to get you to call into the show to ask Janine and I a question live on the show. So stay tuned for the opportunity and be ready to dial when we tell you to call in towards the end of the show. And remember, you've got to dial 9290 9988. So that's 9290 9988. Write it down really quickly, talk it into your phone, whatever you do, but give us a call later on when we let you know. Okay, now it's time to get into tonight's topic, which is ETFs versus stocks, where to invest $10,000 for the best growth.
Now, have you got your A game on? Because you're going to need it. We're going to go
I'm always on my A game.
All right, I'm excited about this one, and I was going to get the pink boxing gloves out for tonight's show, as given your thoughts around ETFs, I knew that things may get a bit heated with this topic. It's no secret that Dale and I will at times have opposing views, so this will be an interesting discussion. Now, I'm not completely certain about what to expect from him, but as a wise woman once said, best to be prepared for anything. If you're concerned about Dale's safety, you blokes out there, don't be. We have a first aid kit handy. Now, back to ETFs, and no, ETF is not a dirty word. It stands for exchange traded, get that out, funds, and they're listed funds that trade on the Australian Stock Exchange. There are ETFs covering almost every area of the market, from the top 200 shares in an index to sector ETFs and specialty areas as well. So recently, we saw over 200 ETFs listed on the ASX. Wow, that's a lot, isn't it?
You didn't tell me I needed my motorbike helmet to protect myself. Jeez. Do I need my suit of armour?
I was going to do some sound effects, but I thought it's probably not a good idea.
No, don't.
Might fall flat.
Don't. Okay.
Just like my jokes.
Okay. Well, just a bit of background for you. The financial industry really sort of began promoting exchange-traded funds heavily to investors post the GFC. Now, they were around pre-GFC. Now, they did so because many investors had taken what money they'd had out of managed funds after the decline in the GFC and ran for the hills. And they were angry because their financial advisor had recommended that they continue to hold. Now, eventually the stock market had fallen 55% and many exited the market near the low as the pain of holding was just too great, and those who did hold had to wait around a decade to get back to square one. But the industry eventually achieved their aim as investors saw ETFs as a low-cost way to eliminate the need for an advisor.
Now, looking back, when the market was rising prior to the GFC, many trusted their advisors because their portfolios were rising. In financial circles, this is called misplaced credit, as quite simply anyone could achieve a good return in a strong bull market. And so the return was more about the market than the expertise of an advisor. At the time, investors were blissfully unaware of the lack of risk management to preserve their capital in the event of the eventual cyclical downturn in the stock market.
Now, sorry, I can't get my mouth to work. Recently, we interviewed an advisor from the US who described what we just mentioned as his experience was the same in terms of the investors or the way investors in the US think. He mentioned that they often attribute to the growth in their portfolios to their advisor when the market was bullish, and they gave no thought to the risk that they were taking and how their advisor would manage that risk. Now, he said many of these people were just simply focused on paying less fees rather than the most important aspect of investing, which is the risk to their capital.
Remember, most ETFs with exposure to the stock market will rise and fall with the market sector or industry they reflect. The problem for investors is that the COVID correction will cause investors to become complacent, just as we saw prior to the GFC. And this will see investors opting to buy and hold more, focused on what they can make and chasing yesterday's returns rather than looking at how their risk is being managed. So that's really interesting, isn't it?
Now, what's really interesting to us is how more than a decade on from the GFC, investors are still making the same mistakes, as around 80% have their money or their money is being invested in index ETFs, and yet they still do not understand the risk and how to manage it ahead of the next major market downturn. Now, as you know yourself, right now, how you cope with, ask yourself right now, how are you going to cope with the next stock market crash? Just ask yourself that. Will you put your head in the sand, frozen with fear, or will you run for the hills? Or we have a solid strategy designed to protect your capital. Now, we're going to share with you our thoughts on risk management with ETFs, and we'll also give you our opinion on their performance as to whether to invest in ETFs, stocks, or a combination of both. Now, we'll also discuss some tips when selecting the best ETFs and whether now is the time to sell them. So let's get into the charts right now.
All right, so you can see there on the screen, first up I've got the BetaShares 200 ETF.
Yep.
Now, I know that in putting this up there, you're probably going to give me a hard time about it because you said no index ETFs.
I hate index ETFs.
Oh, gosh.
I think it's a waste of time.
All right. I want you to get it out once and for all, because once you've aired this on the show, then you don't have to complain to me anymore. So
I don't.
Why do you hate them?
Because people can do better themselves directly investing in shares.
Right.
I've never done any research. Well, sorry. I've done lots of research, but I've never done any research where it's proven the opposite to me on an index ETF, whether it's top 200, top 500, whatever it is.
Yeah, now you mentioned that you did this on 4 different occasions, didn't you, over time?
Done at least 4. I've done it on the US markets. I did it for an article for the US market on the S&P 500 that they were trying to promote ETFs on the index ETFs on the S&P 500. I go, why would you do that? Just buy the top 10 stocks. Top 10 stocks in the S&P 500, Apple, Google, Microsoft, I can't remember more, Facebook, Amazon. Like, seriously, why would you want to go past those stocks? They're all gone.
Okay, so what stocks would you buy in the Australian market?
I'd buy the top 10 or top 20. And I can pretty much, if you went back 10 years and bought the top 20 stocks in the Australian market and then, bought and held them and just keep adding your dividends to your portfolio, you'll outperform any index ETFs.
What if someone's a long-term investor and they don't have the time to look at the stocks?
I don't care.
Don't know how to select the stocks?
Buy and hold. I don't
Is
like
there
buy
ever
and
a
hold.
place for index ETFs
Not
then?
in my book.
Not in your book?
Not in my book.
No?
No, because you can be, if you want to be, can I use a 4-letter word that starts with L?
Are you going to?
I know, lazy. And it's not necessarily lazy, but just if you want to duck your head in the sand and just go, I want to buy and hold, you can buy and hold the top 10 stocks in the Australian market and come back 10 years' time and you'll make money.
What about the banks? Look at them. I mean, they've only come back to where the NAB's just come back. NAB's done nothing in 10 years.
I know, but I'm just saying over history, over 120 odd years of history, you can pick 10-year blocks.
Now, we've had this debate before because you said you've got to be very careful about which shares you pick because it could be 1 or 2 of the shares that you pick out of the top 10 or 20 in the top 20 that go the other way long term if you do just buy and hold them.
Okay, if you ask somebody would they rather get the returns that the market does or beat them, what would they say?
I think that people will say beat them.
Okay, and what percentage of people would say they want to beat them?
I'd say most.
Okay, so why follow the index?
Okay.
Why invest in the index? If you want to beat it, then you've got to do something different the index is not doing.
Yep.
And if you're looking at the top 20 stocks, there's more than half of the whole weighting of the whole all ordinaries index. They're the ones driving it.
So did you compare the top 10 stocks to the overall top 20 to see what the difference was?
Between the returns of just the top 10 as opposed to the top 20. No, I didn't do that.
Yeah, because it might make would that make any difference, do you think?
No, I don't think it would.
So then why wouldn't I invest in a top 20 ETF?
You probably could, but you could do that. It depends on whether it pays you dividends as well. It depends on a few things because somebody's got to manage.
I'm John Smith and I just want simple.
Well, somebody's got to manage the ETF, don't they? Okay, and if they're managing the ETF and buying those 20 stocks, are they going to manage it for free?
No.
Okay, there's going to be fees in there somewhere for not only the buying and selling of the stock in the ETF,
the ETF you've got to buy as well.
but somebody to manage all the paperwork and all the things and the registration, the ASIC licenses, all the things that they need to manage an ETF, the insurances that they need. If I buy and hold the top 20 stocks myself in my own name, once I've bought them, do I have any costs for the next 10 years?
I don't know, but we're running out of time.
The answer is no. Why? I'm managing them myself. There's no cost if I buy and hold. So therefore, just in that little thing, they're going to do better just by holding the top 20 stocks yourself as opposed to an index ETF. Now you
Lovely. Thank you for that.
Move on.
You've done well.
I'll put my soapbox away.
I'll put my boxing gloves away.
Now I'm going to get some people who are another 4-letter word will probably post comments on the YouTube saying you're wrong, blah blah blah. But again, it just makes logical sense. I've not had my research say anything different.
All right, now I just want to look at some other ones. Now I've kept it really simple. Most of the ones I've looked at are BetaShares. They're Australian obviously. I've looked at some Vanguard ones as well. This one's actually the Australian Technology ETF, which I like.
I like that.
You know, I mean, look at the chart. It looks really good. What I found interesting is because it's going to replicate what the biggest, obviously, the share that is within that particular ETF. Now, APT, this looks like the chart of APT,
well, it depends on the weighting, doesn't it?
Yeah, but the difference, what I wanted to show people was the difference between APT's rise was about 100, and the ETF's rise, 170% rise versus 1,800.
You're better buying, afterpay.
So the upside is that you could get better return in the stock. However, the volatility to the downside is actually higher on Afterpay because you can see it fell, I think it was about, 40% or something. So
that's the benefit of an ETF. It squashes volatility.
Squashes volatility. So the ETF actually had a volatility that you can't see, but around 21%. So it was about half. Right? So that's interesting in itself, isn't it?
Yep.
In a normal market decline, when we use strategies that we used, we actually significantly reduce the downside of clients' portfolios.
We restrict volatility with
versus
stop losses.
That. But the downside is that if the market rebounds like it did in COVID, then you get taken out and then you've got to wait to get back in again. So that's one
unusual
downside. But this is only one occurrence of that, in the whole history in 100 years of that happening. But I just thought it was interesting to show that point on that ETF. But I thought we'd also have a look at oil as well, because this is a big, highly debated topic at the moment. And oil and commodities are really, taking the spotlight. Now, we can see here that we know that the oil price plummeted. This was, you can see, the chart tells 1,000 words, doesn't it? So when COVID hit, we saw that happen in early 2020, but it was already in a long-term decline. We saw November 2018, there was a big drop as well. Now, if we go and look at the actual oil price, so this ETF is a beta shares oil ETF, which is actually trying to replicate the futures, the oil futures, not the spot price, okay? So that's different again. But just to show you an example of what the spot price has done, so that was where that contract went to negative, remember? When they sold it, and we thought it could never happen, but it did.
It did.
But so this is a long-term decline. So now we can see that, in theory, it's sort of crazy because it looks like it's long-term bullish.
Yep.
When everybody's expecting the oil price to fall away because the demand's not going to be there.
So what you're suggesting is
what I'm saying is, if depending on how you view the world, because it depends on your values. Are you going to invest in crude oil futures, like you're going to buy an ETF in this sort of space, if you don't agree with the whole concept of oil, and if you want to go green, then you shouldn't be in this space, I guess.
Yeah, but what I'm hearing you saying is like, I'm against index ETFs. I don't have any issues with ETFs in specific areas, like things like alternative energies and fuels. Well,
we're going to get into it, looking at that in a second.
And so what you're saying is
this is okay if it suits what you're looking for in trying to get some exposure to the oil price.
Because trying to understand oil, you may not be there, so get an ETF in it. Don't have a problem with that.
Yep. Okay, so... Yep. But the difference between the two charts, though, I wanted to just say is due to the fact that it's measuring different things.
Correct.
And you have to be aware of that. So you really need to read the fact sheet on the ETF website and fully understand
exactly what they're doing,
what it's doing, and what the benchmark is and things like that.
Read the fine print.
Exactly. So now we're looking at gold, because gold is a really good area, because we've had this argument before. Why not invest in the gold ETF? Because you talked about putting people's money into gold bars. At least this,
gold
people
stocks.
can see a chart and they're following a chart when they're looking at an ETF. This is actually the commodity. So this is the gold spot price that we're seeing there, which has been going more or less in a volatile fashion. So we've seen this big fall that's happened from August 2020, and it's just gone up and then back down again recently.
The ETF's slightly less volatile, but it's still following the same patterns.
Well, you haven't seen the ETF yet. I haven't shown you yet. So this is the Beta Shares Gold Bullion ETF. So you're right, it is more volatile. How did you know that? You've already had a look at my workbook, haven't you?
Well, I'm just a genius. Do I get the elephant stamp now?
And the stocks are more volatile as well. So I thought I'd bring up Newcrest. So people have the options of buying an ETF, which is Beta Shares have one. There are lots of gold ETFs around that you can have a look at and do your research on. I would actually suggest people have one of these on their watch list. I think it's good and important to have from a medium, short-term or long-term investor's perspective. You can trade these ETFs because they're just like stocks essentially in terms of being able to buy and sell them on the market. Now, you have a point to make about that shortly, but there's the gold futures. It doesn't look exactly like the futures, of course, right? And it doesn't look exactly not like Newcrest. There are going to be differences between some of the ETFs and the stocks because it's I guess a conglomerate of a number of different shares that go into that ETF and the exposure that they have. You know, Newcrest has always been a risky share to put the money into.
Yep.
So therefore, there are other gold stocks that I really like, and we all really like on the stock market. But it may be important to have one gold stock and one ETF. Why wouldn't you?
Yeah. So basically, when we're talking about investing $10,000, what we're saying is you're probably going to have some space in your portfolio for an ETF. Most of your portfolio should be in good top stocks. Maybe 9 position, 8 position, 9 position in a good stocks, direct stocks, and maybe have 1 or 2 positions in your portfolio that could be an ETF in a specific area. It could be gold, could be oil,
could be. I've got other ones there which we're not run out of time to have a look at because Dale talked too much. But I've got other ETFs that are related to climate change, sustainability.
Absolutely, sustainability.
I saw some to do with sustainability, but then you might, or ethical companies, for example.
Ethical investing, yeah.
But you might have thought that when you look at the list of stocks underneath that, you might question, in your own opinion, about the stocks on that particular list, you know, because some of those stocks could be credit card companies. And
correct. So don't just pick the ETF because you think, I like the sound of it because it's in robotics or microbiology.
Look into what stocks are in the ETF and whether you actually, you know, are aligned with that before you pick it.
Read all of the documentation. Don't go when. What we found is all the time, doesn't matter whether GFC or coronavirus or, you know, 87, the tech wreck, you name it. I've had people, they'd come to me and I go, did you read the stuff before? And I went, no, I didn't. And it's no use reading all the stuff after the proverbials hit the fan, do it beforehand, so you know what you're investing in.
The beautiful thing about ETFs is whether it's a currency, commodity, an ETF, a stock, you can use the technical analysis and trade it.
Absolutely.
So that's the beautiful thing about it. So you need enough history. So I would suggest not picking up ETFs until they have enough history. I even found one that there's a gaming one, like, you know, gamers, gaming companies are all amalgamated into an ETF.
I'm excited about that.
There wasn't a lot of history on it, but I'm sure over time this will get traction.
Okay, Janine, I know you're excited about ETFs, but it's time for us to move on. So that's all from us on ETFs versus stock. But before we get into our next email, now's the time. If you have your phone ready, which I hope you do, and you've been patiently waiting for the opportunity to call into the show and say hello to Janine, because you don't worry about me, now's the time to get dialing. The number you need to call is Melbourne 0392909988. That's 92909988. So pick up your phone now, give us a call. Remember, it's first in, best dress. So again, 92909988. Now, while you call with put your call to us, we'll get into answering the next email.
Now we have a question from Nash. Hi team, purchased 1.2k worth of Pilbara Minerals PLS at $1.30, and it's had a very steady rise since now, sitting at $2.45. What is your opinion of taking money off the table and having a free ride the rest of the way? I'm in two minds because I think lithium is on a hot streak and could perform well long-term. Regards, Nash. Well, look, so many people have talked about lithium, haven't they?
Oh yeah, lithium. It's the flavour of the month because it's gone up. What's it? Lithium. The price of lithium's gone up 50% this year. Something like that, or a bit more.
I just think that people need, once the stocks get to these sort of levels.
Slow down, stop. The horse is bolted on you.
Yeah, that's exactly right. We're about to see that on the chart. So perhaps we just have a bit of a look at PLS on the screen there, and you can see the monthly chart. It's just gone ballistic. So we're talking about, you know, from where it was prior to...
And Nash has got in at the right time, hasn't he?
Yeah, say this high December 17, it's more or less doubled, or it has more than doubled since then. So if you weren't on it, you wouldn't buy it. That's the bottom line. Now, the real challenge is going to be, how do you manage the trade? Because it's one thing to actually press the button, have a set of rules to buy before you press the button, and have a stop loss before you buy. And then there's the next step, which is actually managing that trade and, you know, making sure you take it to the exit and hopefully manage it into a profitable position.
How many times?
So look how volatile it is, though.
But how many times? What I was going to say. Sorry again for cutting you off, because somebody will yell at me for doing that. I get yelled at all the time, don't I? Go ahead, make my day.
I wasn't going to say no. Don't yell at me.
With stocks like this, how many times have you seen people with a stock like this, they've doubled their money, they've got good profit, and then it starts to fall away and they go, oh, I'm not going to sell it yet, I'm not going to sell it yet because they don't know how. Yes. And then they go, oh, when it gets back up to the high that it was before, I'll sell out. And then it keeps going down and they go, oh, I was in 100% profit, now I'm in 30%, so I'll hang on because now I haven't made enough profit because I've lost so much.
So how should they protect that profit? That's the question.
Have a tighter stop loss.
I know, but how do you do that? Like in a situation where we've got this blow off and there's no, there's the trend line, you can't get a trend line up under it.
Have some other rules, have some more education to do that. But right now it's looking good. Would you sell half and leave the other half on the table, or take your capital out and effectively sell half?
I guess the first thing I'd be looking at is what I'm doing right now, which is how far might it fall? Because it's reasonable to think that a stock falls at least 10 to 15% from a high before you even get an exit. And look, it's already fallen that. And the challenge right now is managing it to a higher high, ideally, and getting that higher next move up and being able to trail your stop up. Right now, I'd be wanting to because backtesting is not going to tell you everything, but it will tell a lot about that particular share. So I'd be backtesting that to work out the best strategy.
What if he doesn't know how to do that?
If he doesn't know how to do that?
Call Janine.
I would suggest don't go into the stock in the first place if you don't know how to get out.
All right, so we're not suggesting you take your money off the table, mate. I think, it's probably safe to leave it there for the moment, but just set yourself a line in the sand that if it does start to fall away, at what point will you exit your position? Because it really is about protecting the profit you've got right now. But great choice, great entry. I love what you did, so well done for that. Now we've got another call, I believe, and it's Ahmed from Sydney. Are you there? Hello, we've got somebody from Sydney there. Is it Armin?
Yes, Carl. How are you?
Good. Did I say your name right? Is it Armin, is it?
Perfect. Amen.
Amen. Oh, okay. Well done. Sorry, mate. Okay, so what's your question for us?
Just want to, I'm very new with the investing and follow you for last few months on YouTube. I would like to go through the course, but before I go, I did start with my with the leveraging, the platforms, but I unfortunately lost my money. So I need to know what you recommend when we investing. Should you use your own money or leverage also can be beneficial? You
sound like you're just starting out. Is that correct?
That's right.
Only ever use your own money, mate, when you're starting out. If you're not, you only use leverage when you're an experienced investor or trader. So, but have you got any other comments you want to make, Janine?
I was just struck by the thought when we were back before the GFC hit. I can remember us being at a trade show or something like that, and the amount of people that were trying to get into CFDs and they absolutely knew nothing about it, and we could see that was a sign of a pending correction coming on the market. Just because all these sort of signs, the same things repeat, you guys, because it's just human nature. But just the fact that we're getting more questions about that sort of thing is interesting. I'm not saying the market's going to correct now because I don't think it will, but people are starting to think again about the leverage side of things.
Borrowing always causes crashes. So if you want to be like Armin, just give us a call, 929-099-88, and you get on to Janine and I have a bit of a chat. Okay, next up we do have a question from Tim who says, hi Dale and Janine, why does a company's share price often drop after posting a strong financial report? Tim,
Probably because the forecast wasn't great or there was something in it that the bigger shareholders weren't excited about.
Does it always fall?
I don't know, it may have been falling prior to and therefore was just continuing the move down.
Okay, last week.
What
happened with QBE?
Could be an ex-dividend.
What happened with AMP last week?
On AMP I haven't followed. Something
Both of them shot up because QBE went back into profit and AMP posted good results.
There you go.
Strange, and they both shot up. So they don't always fall when they do an announcement. But if they announce all-time record profits, quite often they'll fall, don't they?
Shortly after. Because all the investors will pile in because it'll become mainstream news and then everybody thinks, oh, these guys are doing well, I'll buy. And then shortly after, it could be weeks later, they fall. Yeah, so it's only short-term, matey. But thank you very much, Tim, for your question. Now we move on. Next question is... I can't see it. I think we've got Wesfarmers is the next question somebody's written in. Let me get it. I'm going to read it. So the next question is from Say, who says, hi, Dale and Janine, could you please give your opinion on Wesfarmers' current trend and is it the right time to buy this share or you suggest waiting for a pullback? If yes, pullback,
By what value? Thanks for your answer. Kind regards. I think it's SAE.
Yeah, that's a lovely name. Looking at this one, really good question and great stock choice too to write in about. It's so strong, Wesfarmers. If you're in it, you just keep holding it. That's the thing with Wesfarmers. I think it's getting close to a level where it may turn soon, and I believe that it could be, close to that $70 mark. It may get to the $70 mark or just above it, but we could see it turn down before that. So you've just got to be mindful of that. Nice trend up under it, but the trend line's going to be really flat. So we need to actually find another set of rules. So this is where things like the rules that we teach in the Trading Mentor course can be really good for these types of shares when they do pull back. So you've got another rule in your kit bag just in case.
Yeah.
But
okay, so she's asked about whether she should pull back and buy it after the pullback and at what price. We're not going to tell you that because...
No, I wouldn't be buying it now, like at this point. Even if it does pull back a couple of weeks, you're talking about buying something when it's falling, which we just don't do.
Yeah, and it's whilst we could give you a figure what we think that might change next week about where the pullback is, and then you've got to look at it what's happening around where it pulls back and everything else. So right now, if you don't own it, which sounds like it, don't get into it. That's pretty much. Now we do have another caller. It sounds like we've got somebody, Brendan from Brisbane, another person from Brisbane. How are you, Brendan? You on the line?
Yeah, Dale, I am. How are you?
Good, buddy. Good. Thanks for calling into the show. You've got a question for Janine and I?
Yeah, I'm not sure. I've been watching EML. And I've been watching EML, and I'm not sure if it's going, making lower lows or higher highs.
Okay, so have you bought it yet, or are you looking to buy it?
No, I think if it hits $4, I might buy. If
okay.
It confirms an uptrend.
Okay, so what sort of, have you done any analysis on it at all?
Yeah, I've just been watching it at the moment.
Okay, cool. So it's just sort of briefly just having a look, and if it gets to $4, you'll buy. So Janine, what do you think?
Look, I think as soon as he said wait for it to get into an uptrend, I thought, okay, he's ticked one box. I was really excited about that. Yes, because if he had said buy now, I would have thought, why would you? Because this week it's actually falling away. So, but look at the long-term picture of it. It looks really volatile.
Yep.
It could do anything. I guess he's banking on the fact that if it goes through that level, then it's more likely to keep going up. And I guess I would say that's true in the short term.
Yep.
So, it could be $4. It could be through this high here. So this high of 392. But, you set your own level and make your own call about when you're comfortable to get into a share. It's good. I think he's pretty clear about what he wants to do.
Well, he said if it gets back to $4, I want to look at buying that, which may or may not change between now and that point in time, depending on what goes on. But right now, it's looking a little bit bearish this week. But I think well done, matey. So thank you for calling into the show. Now we've got an email from Chris who says, "Hi, Dale and Janine, love the show and have purchased the books. I purchased VUL at a tick over $7 in May 2021 on the ASX. It is now applying for dual listing on the Frankfurt Stock Exchange. As a very happy shareholder, what are the ramifications of such a manoeuvre? Now, the company secretary states that the listing on the Frankfurt Stock Exchange raises the international profile of the mining or miner processor. It also enhances the transparency requirements placed upon the company. I know you'll say I bought them too soon. Well, okay, I don't need to say that, but thanks to your shows and the reruns, I'm getting good feel for charting. I've always been a fundamentals type of guy. Kind regards, Chris." Ooh, it is getting in, isn't it? We're changing.
He might be surprised because I don't think he did buy too soon.
Yeah.
Well, let's just have a look.
He said I would say that, not you.
You would say that. So let's just have a look.
You're always the nice one.
So May 2021, the stock had already started moving up off this bottom. Okay, so he's just bought it a bit further over here. And, there are a couple of reasons to enter the stock. The risk was there. Okay, it could have fallen away through this low, but I'm sure he's got a stop loss because you've been following the show. I think it's done incredibly well. So congratulations on that. What would listing overseas do it? Mate, I think it's going to muck up the share, the chart.
Yeah, I think it'll muck up the share. But the company secretary basically said it. He already put it in his email. That's the ramifications of it all, and that's why the benefit is. It just makes it more
likely to create more volatility, but it could be a little bit less reliable in terms of what it's doing in the short term, really. That's all. But the main thing is just to have a strategy of how you're going to exit. Even though you've got the fundamentals there, you've got to have that technical rule in place.
Yeah, absolutely. So thank you for asking the question. So that's it on this stock?
Next is an email from Stephen. Hi Dale and Janine. I've been watching every week since your first show, just looking at AMP. I don't own and not looking to buy. However, I'm just interested on your thoughts on the recent massive volume on this stock as your TA. What the swear jar is going on with this company? Thanks, Stephen. Okay, beautiful.
He's got a swear jar as well.
Yeah, I don't have my assistant with me today. What happened there? I was just sort of expecting
as I said, the announcement last week. Like QBE and AMP both took off like a rocket. So
well,
it's still a CRAP stock.
I don't think it took off much at all. Look at it.
It did, but it took off on the news, and that's where the what he was talking about. It had an announcement. It took off on the announcement. So did QBE.
Yeah, well, this is an example of don't listen to announcements, because people who might have been sitting here thinking, I'm going to make a squillion on AMP when it eventually stops falling. It's just kept falling and disappointed so many people who have just tried to get in and had dollar signs in their eyes. So look at this now. Last week it was up strongly, yes, but this week it's wiped out all those gains.
It's wiped out all the gains.
So there was no real confirmation of any rise there on 1 week. You just can't buy on news. So that's the point.
He said he doesn't own it, and he's looking to buy it. I don't buy. It would have to do a huge thing before Janine and I would get excited about AMP. You're not excited about it, are you?
I'm not excited about it at all.
It's the most disappointing stock in our market, and it constantly disappoints. It looks like it's going good, and then it goes down, it goes good, and then it goes again.
Would somebody please do something, with AMP that's going to turn the story around? Because you don't want companies, to do poorly. You want them to do really well and be flourish and prosper. But AMP needs to do something drastic, don't they?
There's lots of challenges with AMP. But anyway, that's our thoughts on AMP. So
our intention each and every week is to take a few live callers into the show. So if you've missed out this week, then you will get another shot at it next week. That said, the best way to ensure you get your question answered is still to send in an email. So if you've been sitting watching the show and thinking, I should ask Janine and Dale a question, then my advice is don't think about it, just email your question right now.
Now remember, in order to show your appreciation for us helping you by answering your questions and educating you, all we're going to ask you is that you subscribe to our channel first and then send the email in. Now we strongly suggest you send your email in now to be at the front of the queue. Now for those of you who are challenged by the market and keen to understand more about how to consistently profit from the stock market, then stop playing guesswork and give our team a call. They are here to help.
Well, that's right, Dale. It does not matter whether you are just starting out or are along the road, somewhere in your trading journey. All you need to do is call 1300 858 272 or visit our website, wealthwithin.com.au.
Fantastic. Well, that's it for tonight's show. We hope you not only enjoyed what we presented, but also received great value from answers to your questions. So now it's your turn to help us right now and hit that subscribe button on your screen to say thank you to the team to put in a big effort to bring you this show each and every single week.
Also remember to put this show into our calendar, or your calendar rather, to join us right here on the live Australian Stock Market Show every Tuesday at 7 to 8 p.m. If you'd like to have your question answered on the next show, send an email to info@wealthwithin.com.au and make sure you type Wealth Within Live in the subject line. Remember, you must email, and you must do so before 3 p.m. on the day of the show, or while the question is fresh in your mind, just email right now.
Fantastic. And as always, thank you for joining us, and we hope you have a great week. We look forward to you joining us again next week. But for now, goodbye, good luck, and good trading. Stay safe, everyone.
Bye for now.